It's becoming clearer and clearer that the sanctuary, the protections, the decentralizations, the freedoms of cryptocurrency and Bitcoin are quickly disappearing. Today's video, you want to watch the very end. We are going to talk about the Treasury Department. We are going to talk about the IRS. We are going to talk about some things that are in the pipeline that could be happening to Bitcoin before January of next year that could dramatically change the entire landscape of crypto. So to make sure you can fully retain the information, understand what the hell is going on today in today's video, make sure you smash that like button and subscribe as well, guys. But listen, today's story, we're covering what Mnuchin has been rumored to say that he is going to do cryptocurrencies. And we have people like Brian Armstrong from Coinbase that is reacting in a really, how can you say, not so polite fashion. The guy's actually raising the red flags, ringing the bells, sounding the red alert for all cryptocurrency users around the world if this actually happens. So before we dive into what the US Treasury and the IRS is doing, we need to talk about the price of Bitcoin. Right now, there is a huge consensus that November is going to be a massive correction and that December we're going to find new all-time highs for Bitcoin. Let me present to you something that many people are not talking about, just so you can have an objective opinion, okay? This is simply an objective opinion. You could take it, you could leave it, you could like it, love it, hate it, I don't care. So, in the previous bull cycles, in 2016, 2017, there was a massive correction before we found a new all-time high. Happened every time. But the dynamics of what Bitcoin was in that time period versus what it is today is entirely different. We didn't have institutions buying up the bulk of Bitcoin. We didn't have institutions buying up the bulk of hash power. We didn't have the US regulating and attempting to add more regulation to Bitcoin. We did not have the CME and the CBOE, okay? We didn't have any of those derivative products active in the market at that time, okay? So the absence of all those things in this current bull market, I feel that a lot of people keep trying to treat this current market exactly as the previous market and disregarding the fact that this current bull cycle is not fueled by retail, is not fueled by those like you and I with hopes of making a ton of money. Right now, it is fueled by institutions who have zero interest in making you rich. Think about any institutional product that's available to the retail consumer right now. 401k, you have to work a lifetime in order to reap any benefits from that. Interest, a savings account with interest, 2% a year, if you're lucky. Come on now, really think about it. They have never created products and never done anything to benefit the little guy. It's my opinion, okay, it's my opinion that this current rally we are in right now, I would not call it a sucker's rally. I would call it a fake out, honestly. I think we are going to increase again, but given the amount of derivative products that are out there right now, and given the fact that we're seeing things happening with the IRS and the Treasury, I'm skeptical that we are going to see this huge breakout without consequence. I'm serious. I don't know really what to expect, but I just don't feel like we should keep treating Bitcoin the same way we did in 2016 and 2017. And here's a good case in point, okay? Coinbase CEO, Trump administration may rush out burdensome crypto wallet rules. Now, what is happening here is Mnuchin, all right, from the US Treasury Department, is basically saying that he is going to create a law to where your wallets, your private wallets, private key kind of wallets, before you can transact with a Coinbase or Gemini or any of those exchanges, you have to verify your wallet. You have to verify your Uniswap, your MetaMask, your Ledger. You see where this is going. It's a nightmare. It's an absolute freaking nightmare. There is no more privacy with cryptocurrency at that point. And technically speaking, it's no longer unconfiscatable. Because if you think about it, if you have to KYC every ledger you have or every wallet you have on your phone before you can go and transact with Coinbase to cash out or turn it into fiat, At that point, if you're KYC'd and all your wallets KYC'd, there's a record of what you have and what you own. If Uncle Sam said, hey, you know what, by the way, I believe you might owe us some taxes. I'm going to come knocking on your door, and I'd like to have that ledger of yours. What are you going to do? You going to tell them no? You can't say it doesn't exist because you got to KYC it. It's getting crazy, guys. It is absolutely getting crazy. From what I understand, though, laws like this, where the Financial Action Task Force, right, can have something enforceable in that regard. Laws like this, we understand, if this is correct, already exist in places like Switzerland and the Netherlands. Now, I don't know exactly how true that is or how much teeth the regulation has, but that is absolutely insane. It is insane. This is a huge disruption to what cryptocurrency is. The actual core, the actual nature of what cryptocurrency is. And something else to think about is when you look at this right now, what the U.S. Treasury Department is trying to do, think about how many things right now, right? Like if you have unstoppable domains, for instance, in your wallet, that's not a currency. It's not a currency. You're holding keys, right? So if you want to move that around, you have to, KYC to move around your freaking domains. If you have an NFT, if you have an NFT of me or anything like, or any other influencer out there and you want to move that around, you got a KYC to move that around as well. Just think about how many things that we've put on the blockchain that are non-fungible tokens, that are not crypto assets, but are simply information or data. You have to KYC to move that around too. I mean, this is getting really insane. And you know how the US is. When they do something, they expect the rest of the world to follow suit. They expect the rest of the world to adopt the same kind of laws and regulations. So this, my friends, is something to legitimately be worried about. It really is. I mean, there is no loopholes around this. There is no back door to this. I mean, and like they said, this extends all the way to DeFi. I mean, this is going to hit everything right now as far as crypto wallets goes. Now, some are speculating that this very rumor is what's actually causing the correction to kick in right now, which doesn't surprise me. It doesn't surprise me because if something else to think about with Bitcoin is every time we get on a roll, every time we get on a rampage, something just magically falls out of the sky. All right? It's as if it's almost timed. I don't know. It's just so full of coincidence. Bitcoin is, sometimes it's like it feels like a big giant setup, but again, one theory is that this is pausing the bull run that we are currently going through. It wouldn't surprise me. I could actually see that as a justifiable reason, especially considering only 5% of wallets right now, less than 5% of wallets have less than one Bitcoin in there. That's a very small population of people in our ecosystem. Again, the grand scheme of things right now. Whereas majority of the wallets have quite a bit of Bitcoin. That means there's quite a bit of money in our space. That means there's maybe some influence in our space. Maybe hopefully some of these really rich guys in grayscale will be like, hey, listen, politicians, no, not happening. Okay, goodbye. Now, another thing that's happening right now. Again, I actually reached out to my accountant and I got some answers on this. IRS sending inaccurate letters to cryptocurrency traders saying they owe thousands in taxes. I have not gotten one of these letters. I haven't seen one of these letters, but I know these letters are going out there and they exist. So I actually reached out to my accountant and he gave me an answer and told me what these things are. And he said these kinds of letters are not uncommon. He said if you look at people who trade in certain kind of commodities or stocks, they sometimes get these letters as well. He said it's called probing, and also known as a call for action. The IRS knows that there's something deficient. The IRS knows there's something might be up your sleeve. The IRS knows that you may not be fully reporting. It's just simply probing, and it's something that they've been doing for a very, very long time. So it seems like, again, here's another example of a bleed off from where we have things that happen to the institutional world are now happening to us, right? I mean, it feels like we're quickly getting roped in. And I'm telling you, I feel like the main goal of the regulation is to choke out the little guy. That's what I feel it is to to smother out the little guy, push you guys out, and create a situation to where cryptocurrencies and Bitcoin is nothing more than a playground for people like accredited investors. And if you look at the framework, okay, look at the framework, the rumored framework. This is not confirmed, but the rumored framework from people like what Mnuchin is saying over here, and the reaction. And if you see what the IRS has been doing, it's the framework makes it look very ugly. And I feel like every one of us should be keeping our eyes on this. Now, before we end this, I want to share something with you. This is not sponsored. I'm going to start doing a segment. Put my money where my mouth is kind of thing, I guess you could say. It's a segment. It's basically things that I've put my money into or things that I'm going to put my money into. One of those things is API 3. Again, this is not sponsored, but this is something I feel that if you are an investor and if you are looking for that next potential thing to get excited about or put your money into, that for me has been API 3, okay? It's a decentralized APIs for Web 3. Now if you look at the website, it's kind of hard to fully understand exactly what it is that they are doing. So I'm going to give you a quick Reader's Digest version of API 3 and why I believe it's a good investment for me. So basically we know that oracles right now, right, provide a service to get data off-chain on-chain, right? It's just the simplest way to describe it. Get data from off-chain to on-chain, and it's a third-party service. Good examples of that, Chainlink and Band. Now, companies like Chainlink and Band, they sell their data to companies like CoinMarketCap, CoinGecko, and various things like that. And they charge these membership fees, right? They charge these fees, and with these fees, that means they have to run servers, nodes, and all kinds of things to operate their business. Now, imagine if you were in a situation right now to where you have one client that makes up 30 to 40% of your traffic, and you're charging one single membership for that. One single membership. This is what causes the hostility, the friction, the tension in the oracle space between oracles. They're competing for real estate. They're competing for those subscriptions, and it makes things very ugly. It makes things inefficient. Now, something else to think about when it comes to oracles. Let's talk about security and let's talk about integrity. A good model for security and integrity is staking. We incentivize, right? We incentivize the communities to get in there to prevent malicious behavior, bad behavior, fraudulent behavior. Staking is a good example of that with those nodes. When it comes to your third-party oracles, all right, you have an absence of that integrity, an absence of that security. And this is one thing that API 3 is going to do dramatically different. Instead of going third-party, they're going to go first-party. First-party nodes on this, first-party oracle, and it changes the entire dynamics of what an oracle actually is. And so to put that in layman's term, right, instead of having like an example, your current oracles are running the nodes, right, and they're also making all the money. Well, the way API 3 sees it is, why not let them run their own nodes and let them provide their data on-chain directly? I mean, come on, think about that. That's a ginormous game changer in the oracle space. And the question has been asked a lot about third-party oracles is, how can you ensure the integrity? How can you ensure that they're going to do the right thing with that data? Because you got to remember, most of these are black boxes. When it comes to Oracle, it's black box. You don't get to see or know where the data comes from or how it's formulated or how it's brought to you or why it's brought to you. It's a black box. It's tight sealed. You just don't get to see it. This is where the first-party oracles are going to be game-changing, and this is why I personally feel API 3 is worth my money and my time, and also sharing with you guys where I plan on putting my crypto. But you don't have to put your money into API 3 just because I'm putting money in there. You don't have to like it just because I'm mentioning it on there. But what I do want to do is challenge you to look at API 3 the same way that I'm looking at it and the way I explained it to you, and compare that first party to the third party and try to find a way to say that it's not good. You get what I'm saying? Try to convince yourself that it's not good. That's what I did with API 3, and I'm going to tell you, I just can't find a reason why it's not good. So anyhow, listen, I'm watching the price of Bitcoin. I'm watching what's happening with the markets right now. It's exciting times. In my opinion, There's so many elements that exist today that it's just almost impossible to predict exactly what is going to happen and how this is going to play out. Nonetheless, it's exciting times, guys. Listen, I hope you guys had a great, happy Thanksgiving yesterday. If I seem a little off today, it's because you know how it is with Thanksgiving. I fried a turkey yesterday, and when we fry a turkey, you cannot fry a turkey. One cannot fry a turkey without drinks. So today is a little bit rough for me. So anyhow, I hope you guys have a great weekend. Stay safe if you're going to go Black Friday shopping. And yeah, that's all I got. Peace out.